Hey there, how you doing? Welcome to the channel. So today I just want to do an update. We have some people are calling this a market crash. So here we are on Tuesday, the 23rd of February, 2021. And as a reminder, just to keep, I'm just talking about stocks here, but I'm not a financial advisor. Do your own research. This is not financial advice. Okay. So I'm just kind of looking at this. Here we have the sell-off going in the stock market this morning. And so what's interesting, if we look at the SPY here, the S&P 500, we can see that actually the selling is kind of picked up. We're down like 1.5% right now. And then, but what's really getting hit is the tech stocks, the NASDAQ. So let's try, it's down 3.8%. So interesting. So this is actually kind of accelerating. If I go to a 5-day chart, yeah, look at that. It's kind of accelerating down here. Interesting. So I need to be very careful out there. One of the things that I want to make a comment on is I see some people out there live streaming and they're already out there buying stuff. And, it's very interesting. So for example, just saw a guy buy some more of this right now. So let's see what's going on with this. So here we have this horrible open here, right? And let's see what happens. So on that first candle down here, you can see that like on a 15-minute candle, and then we can always just change this, right? So this is important to understand. You can always keep changing your period that you're looking at. So things that may look like a really solid thing on a 15-minute bar may not look great on a 5-minute bar or whatever. You just have to understand that. So you had this big opening down day, but here's the thing. So here we have, once again, we have some people doing some buying here, right in this area here. Oh, look, it's gonna find its footing, and then look, you've already broken below. So it's very important to understand when you're looking at this. Let me look at a 2-day after hours. Yeah, so you're looking at this bar here. You had this really big down bar on the open, looking at a 5-minute. It came up a little bit and then boop, it kind of did that thing where it kind of sells off in that bar, and now we broke into a new low. So when you're looking at something that right now is at a new low, is that a place you want to be buying? I guess all I would say is I would urge caution. I think the thing to keep in mind, and I think this is really the point that I want to make that's being lost on people, is some people are like, you're on these like 5-minute bar charts, these intraday charts, and you're not kind of keeping the big picture. It's like funny. I can see the psychology of how some people are like, look, I have a buy target below 35 or below 35, and they've done some analysis that says, look, you get the opportunity to buy it below 35, you go ahead and you buy it. And it's like, okay, that's fine. So you have some kind of strategy, which is fine. But the thing to be careful is, what happens is you don't know what this is right now, right? You don't know what this is. So here, looking at the NASDAQ composite, you see certain things like in this period of time, after this consolidation. So over here, we have this consolidation period and we broke out above it. And we always stayed pretty much above the 25-day or 21-day moving average here, that purple line. And we did come below it, but then we went right back up. And well, here now we're even dragging the trend. So the short-term trend on the 21-day moving average is now pointing down, and we've blown through the 50-day moving average. So the question really is, what's going on here? See, the issue is you have to sort of have a question of like, you don't know. Like I would say, I don't know. I would be highly suspect going out there and buying something. Why? Because I'd be suspect of buying what's called a falling knife. And so here's the thing that you want to kind of keep in mind. So we're going to go back to March of next year. And I think what we're going to do is we're going to put what I want to do is I want to put this thing on. Start and end. Okay. So what I'm doing is here we are in the now. So here we are in the now. We have this sell-off down below the 50-day moving average. Now this happened earlier over here. We can see that over here, this is what happened. You see you had an uptrend here, and then we got really wailed on, and then we basically went into a consolidation period. And then we eventually did break out, but this consolidation took 3 months to break, 2 to 3 months to break out above, and then we went to this uptrend again. And so now we have this situation where, well, we've broken below the 50-day moving average again. Now maybe it'll reverse and get up above. You can see how it's moving up right now. Okay, so here's the thing. If we're out there and we're doing some buying right now, okay, maybe that makes sense. But the question really is, are we buying a falling knife? And the answer is we don't really know. You don't know. How do you know at this point? See, if you're trying to buy something, you're trying to buy something that pulls back, you have a bar where at least it came up above the previous day's bar. Here, what are you buying? You know, you don't know what it's going to be. You don't know if these losses are going to extend or not. And so you could take a lark and say, hey, you know, it's like, I think it's going to go up from here, and you might get lucky. And I would say in this market, you could get lucky because we do still have a lot of momentum. But the thing to keep in mind is, well, what is this? What's going on here? Well, what happened in March? So if we kind of go back in time here, wish it wouldn't blink like that. Yeah, so now go back to March, and March of 2020, where the whole CV thing was coming out. And look what happened here. So here you had a day that's maybe kind of similar to what we have right now. You have a down day going through the 50-day moving average. You know, if you're doing a lot of buying here, you know, and then what happened the next day and the next day, and then, yeah, you had a little recovery, and then you had this. See, the problem is that you got to be disciplined here, because if this thing like goes for a further correction and pullback, you know, you need some staying power. I mean, think about what's happening here. If you're doing a bunch of buying here, and you've already got big losses because you're already holding. Remember how all these financial channels work. They're always just like, the level of ignorance is astounding. They're always telling you to buy. They're never telling you to sell. And then they magically, when the market starts to go down, they're like, oh, well, now is your opportunity to buy more. Well, with what? If you never sold anything, you don't have any cash available. So here's the problem. So, you know, it's interesting. I'm just watching a guy, and he's like, oh, pulling margin, you know, getting margin ready to go buy stuff. Like, you're here. Matter of fact, you're here. And what if this is tomorrow? And what if this is the next thing? I mean, what if you got another 1,000 points to go on the NASDAQ composite before you even get a recovery, you know, and you're pulling margin here? What the hell are you doing? I mean, like, did this never happen? I mean, are we so like lost and confused that we can't go back in time? Not even a year. It hasn't been a year since call it a year. Yeah, February. Like, to look at what happened a year ago. What's different now? Sure. We're not closing down the economy. We, you know, Cerveza's getting better, all that stuff. You know, okay, fine. But you don't know. The market doesn't, you know, this stock market has done all this stuff despite of the fact that the economy has been very weak, unemployment very high. So the point is that it's decoupled from the actual economy. So now the economy, I would expect, is going to get better to some extent, right? Well, okay, so does that mean the market has to go up? No. I mean, you can't have it both ways. You can't be like, oh, look, from this March low up to here, we had this huge run in the stock market. And yeah, because the economy doesn't matter anymore. Okay, fine. But then why do you think that the market couldn't crash now? I mean, I don't know. I'm not saying it's going to. This isn't even a crash. This is just like, look, this is just a very strong correction over a couple of weeks. And then, you know, it made a nice bottom here. And the problem is, if you're going on margin and you're in this day, matter of fact, you're in this day here, and you got another 10 or 20% or 30% down, and you go on some margin up in here, hello? Do you think you might get margin calls down here? Do you think you might get some forced selling going on? So you really want to be careful. So I don't understand the thinking here. You know, you can see that back here you had this, and the other thing to keep in mind is fundamentals don't matter here. They don't matter. right? It doesn't matter. If people are selling for whatever reason they're selling, it doesn't matter. So I would urge caution to people. I see people doing this right now. They're just out there buying stuff, and it's like, come on, really? I mean, maybe that makes sense. Now I'm going to tell you another story too, and I'm going to tell you this story. And I had a friend, and we were all engineers, and we're engineering, and we are back in the tech bubble. So we're in the late '90s, and what was going on is a friend of mine. Now I didn't really do very well in the stock trading. I had some success and a lot of failure, but I had a friend that's like, okay, look, he investigates at some big bank or whatever, and found someone to take a bunch of his money and go invest. Now, what was happening back in that time? So here we are. We have the Nasdaq. This thing in this late '90s here, the last month of that, '99. This thing just went crazy in that 1999. And I remember what he put, like he had a financial advisor. So he's paying this person good money to manage his account. Now, what happened? Oh, the crash happened. Okay, fine. The advisor is like putting in all these stock buys for all these companies, whatever it might be, like companies that aren't around, like SanDisk, all these other companies. And what would be interesting, like half those companies don't even exist anymore. Some of them, yes, were acquired and it's still our businesses, fine, but a lot of them just don't exist. So she had this list of like 10, 15 companies, and he was showing it to me. And she had all these buy prices like, oh, I'm going to buy pet.com at $100. And the thing was at 500. And you're like, oh, wow, that's going to be quite a bargain. But it was making the same mistake that I'm seeing now. People, this advisor was sitting there and saying, look, these companies are going to be a bargain, and I sense that there's a correction coming, and this is before it even started. And like, if I get an opportunity to buy something at under $30 and it's trading at $60 now, I'm going to scoop and buy. But here's the problem that happened to him. Here it is, like, oh, down in here, like he's getting all these fills that she's buying like crazy. Oh, great. Oh yeah, look, you're even up a little bit. But look at lost it all. I mean, he lost like literally all his money in that account. And the the and so the question is, what do you do about that? Well, I don't have the answers for you, but you can see the problem with the thinking. The problem with the thinking is to say something is, you have a strong conviction in something, right? I have a strong conviction in something, and therefore at below some arbitrary price that I made up. And yes, I did a spreadsheet based on expected earnings in the future that may or may not happen. And I've picked a price. So it's a losing proposition. And it's so funny because I guess I'm an old guy, because I can see people like on YouTube doing the same things that people have done in the past, and it didn't work out well. Now, I don't think, that said, I don't think this is I wouldn't be surprised if this is going to like pull back, like this start going right back up. I think that you have so much just liquidity out there that I really wouldn't expect this to go much further. I mean, it's possible that there's enough damage here now that we go into consolidation, like thinking back here, right? Maybe there's enough damage where, okay, it does damage and it takes time for it to recover. So you get a consolidation. Distinctly possible. But all I'm trying to point out is that really need to be careful, because if we're looking out there and we're looking at something and we're saying CCIV is like, oh, look at that. Great. I got an opportunity to buy it at 30, and it's worth whatever you think it's worth. But the problem is that all this stuff is only worth what someone wants to pay for it. And that's all it really is. I mean, the guide to understanding the stock market is Reminiscences of a Stock Operator, which is a fictional book by Favre, but it's based on, Jesse Livermore. And things have not changed from those days, from 1906, the early 1900s, late 1800s. It hasn't changed. Okay. And I know you would love to think that it has changed, but it hasn't changed. And so when you buy this, what are you buying this for? you expect the price to go up. That's all you're hoping for, the price to go up. And you're thinking like, well, yeah, hopefully you have them earnings, whatever, and stuff like that. And but are you expecting dividends? No. You're expecting one thing, the price to go up. And that means that you need someone else to buy it from you at a higher price to make money. And that's fine. In this kind of environment, yeah, it's kind of working. But at some point it stops. So let's look at some other stocks. Interesting, this Carnival over here. This one I had, actually, I'm just going to go over some stocks that I had. I don't own all these right now. Apple, I just have a couple little bit of puts on there, just as I'm trying to hedge my other part of the portfolio that's just sort of long and strong. So that's why I have a little bit. So that's up today, which is good. And the question here in terms of the hedge on the Apple is trying to figure out, well, do I just take the profit on the put? Probably should just take it. Carnival, this one is one that I had gotten in, made a little bit of money, and then it seemed like I got out early. And it's very interesting because then you look at the next couple of days and you see that, yeah, I got out early. But then today it's correcting. But this, if it kind of holds like a hammer like this, it might be an opportunity to get back in. It's very interesting, right? Because if like on tomorrow you buy above this, if this looks like it does tomorrow, this bar could totally change. But if it did look like this, it's kind of a hammer. And if it breaks above the high, you could be back in and above this resistance here. A lot of this is starting to happen above there. So that's good. It's got potential. And then Grayscale, this thing, Bitcoin's getting beat up a little bit. Yeah. The thing to keep in mind with this is that, yeah, 18% on this Grayscale. And I know that I don't know what the actual Bitcoin went to today, but you can look at that too. Here's a concept of strong hands. I had bought some here. I sold some here. So I got profit locked in, but I'm still sitting on some. So this is in a case of strong hands versus weak hands. If I'm down here and I bought this particular thing at $14, and oh my gosh, it went from 58 down to 44. Well, I bought it 14. I don't really care. So I'm what they call a strong hand, right? I'm a strong hand. But if you had recently bought it here or here in the 30s, you're getting nervous, right? And if you had bought it in the 40s, you're nervous. If you bought it up here at this thing, you're kind of very nervous. So you're a weak hand, just so you understand that. Gold, I'm just going to check gold really quick. Not much going on. So here's some of the high betas, the Neo. Look at that. It's kind of putting in a bar like that. So it's trying to recover. But it's a big 9% down day because of the gap. And Oxygen finally breaking off. It's breaking down from its little table it had set up there. Palantir. This is another one where I remember the guy was buying a bunch of stock down here, and I was like, well, maybe I'm wrong. And I said I was wrong, right? Because he had a nice run up the next day. But then, then it got a dark cloud cover yesterday, and then today it's down here. So this is really, this is like, it was not sustainable. You had, from my point of view, it's like you really had no good buy there. You're hanging out here with no support. I mean, you're below the moving average. I mean, this kind of stuff is more of a setup for a short than a long from a technical basis. So yeah, it's kind of dangerous. And silver, nothing really. And then here's kind of, S&P. So keeping today's in the picture, we're down 1.8% today. And if you look at it, you are, we're not even really breaking any trend here. Right. So on the S&P, S&P is a lower beta. You have more stable companies in there. So here it's like really nothing. I mean, this is just a pullback. It's not a correction. So it's kind of funny that you're sitting there, people are calling it a crash, and yet this is not a crash. This is just the pullback. It's only down 1% for the S&P. The problem is that NASDAQ is not a crash. This is 2% is not a crash. Right. But it's a pullback. And actually, if it kind of holds in something like this, it could be very positive. Right. At least on this index, because if it ends up going below, it's already gone below the 50. But if it closes above it, that's possibly that's a positive sign there. I think the problem is that you have all these just Kevin types out there on you know, these trading apps like that are suffering through this. They have too much of their portfolio in this crap. You taking 38% loss. I mean, you can't recover from that. I mean, remember what that means. You know, 30%, like you need like 100% to get back to where you were. Like let's do the math here. I know people don't like doing math, but if you're going to trade stocks, do some math and use a calculator. That's fine. Best to do a spreadsheet because then you can play with the numbers and see what the effect is. But look at, if you if you were at 60 and now you're at 30, right? Keep the math simple around it. You know, you went down 50%, right? Okay, 60 to 30, 50%. Well, now to go to 30 to 60, what do you got to, you need 100% return. You need 30 on 30, which is 100% return, right? So like, I don't know what else to say about that. It's like, do you guys understand? You guys understand these basic things? The answer is no, you don't, because you can't trade on a damn app. You don't have any information. Do they have a 10-year chart? I mean, if you're sitting there and you're trading on stuff and everything's like a 5-day chart, intraday chart, and you don't see the big picture, how do you know? I mean, how can you buy something now? How the hell can you buy something now without having any concept of where the resistance is going to be? Like if you're buying stuff now, okay, fine. But there you look at all this resistance. You have to go back days. I mean, you gotta be at least on a daily chart. You should be on a weekly chart to kind of see where's the resistance. I mean, if you're buying stuff here, you have all these sellers in the 30 that got screwed here, and then you got all these sellers at 38 and 40 that they got screwed, and they're all waiting to unload on you. So it's just like, come on, campers. I mean, just come on, campers. What the hell is wrong with you people? I mean, it's so funny. I guess I've been asleep for about 10 years. And, I mean, figuratively and maybe literally, but you just looking at this and I'm just seeing people do stupid stuff. And I guess I'm pissed because they're making more money on their YouTube channel than I am. So I'm like, okay. And Leo, and let me comment on this. Look at all these bars. Look at all these bars. These are like hammers, which are potential reversals if they hold. And like tomorrow, if this is how that bar closed right now, that's a potential reversal. And if it had like held above the moving average, that's a potential place where you could buy in tomorrow, right? But like we're only a couple hours into the trading day. Like you still have the rest of the day. This has to hold. Like this bar where you had all this selling and stuff, it has to hold, right? So you can see how, opening bar, blah, 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 got the crap kicked out of it. And then it recovered, and look at already, you're starting to pull back. So you come into the gap is resistance, and you see it pulling away. It's pulling away. So you want to really be careful. Okay, so I think that's all it is for now. I think the question for you, for yourself, if you're out there trading is, I guess, is this a crash? Really? Think about it. And if it's a crash in your portfolio, because you're down 30% today, because you're overextended and stuff like that, yeah, that's it for this one.